Oi, 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 yada yada yada. What's good, guys? Welcome back to another trading video. In today's video, we're going to be going over different sorts of fair value gaps. There are 4 key fair value gaps everyone has to learn. So let's get into it. First of all, I'm going to just recap for everyone. For the newbies out there who don't know what a fair value gap is, go ahead and watch my other videos because I go more in depth in it. But just a quick recap. So a fair value gap consists of 3 candles. You guys can rectangle it out. So it's for a bearish fair value gap, it's the bottom of the first candle, including the wick, and then the top of the third candle, including the wick. Then you drag it out. For bullish fair value gaps, it's the top of the first candle, bottom of the third, and then you drag it out. Okay, so that's what fair value gaps look like. They come in all shapes and sizes, if you know what I'm talking about. Okay. Basically, or essentially, the fair value gaps have no opposing orders, buy or sell orders in between it. In this case, there was no opposing buy orders as much. It's called an imbalance, so it's a volume imbalance in the market. How we mark that out, I just showed you guys, and the first fair value gap is called a common gap. A common gap is when a gap gets filled in quickly. So for example, I'm going to mark this out, and right after a couple minutes, a gap would go into it and then come back down. I am on a 2-hour time frame, obviously, but it's just an example. I'm just giving you guys an example on the chart of how visually it looks like. Let's say we're on the 1 minute right now, or on the 5 minute. Okay, a gap would go up, or the market would go up, tap into the gap, and come back down. Okay, so the second one is called a breakaway gap. A breakaway gap is usually what happens when a new trend starts. So after a market structure shift, basically, or just a new downtrend or uptrend happens, that's when price gets filled in later on. A good example is if we go down to, let's say, the 15 minute, and we find a trend right over here. Where it started going bearish, we have to find where it started going bearish, which is down here, which is up here. Okay, so this is a market structure shift, okay, plus fair value gap. So this fair value gap gets filled in. This fair value gap, so it doesn't get filled in. This fair value gap happens, but doesn't get filled in just yet. Now that's what's called a breakaway gap, okay? And as you can see, price is so far down that it's going to have to come back up and retest this fair value gap. So it'll take its time. It's going to take a while. And usually breakaway gaps are traded within higher time frames, like a 1 hour, 2 hour, 4 hour. Or you can choose a 15 minute. It's not going to come easy. You're going to have to wait, you're going to have to wait a couple hours to days until it gets filled back in, okay? Okay, and the third one is called a runaway gap or a continuation gap. So a continuation gap is continuation of the market, making fair value gaps over and over. For example, we started going bullish starting from here. So we started going bullish right over here. And we had our first fair value gap, which got tapped in, okay? Then we had our second fair value gap somewhere. Let's say we got it here. Okay, we have a fair value gap here that got tapped in. And then we had a fair value gap here that didn't get tapped in. Actually, no, it did. Okay, yeah. Zooming in. Let me zoom in, I'll show you guys. This fair value gap gets tapped in by this blue candle over here. Then we get another fair value gap gets tapped in. So basically, it's simple. It's just continuation of a fair value gap. It's just making fair value gaps over and over and over and over and over, and it's continuing the same direction, either up or down, doesn't matter. Okay. Same thing with downtrends. It's continuing going down. It's making bearish fair value gaps over and over, and it's getting respected, and it signals strong momentum in the market, basically. Okay, and last but not least is called the exhaustion gap. So an exhaustion gap is a slowdown of a momentum of the trend. For example, people like to call it pattern. People who trade patterns like to call it resistance or rejection, right? But obviously, it's called an exhaustion gap, and an exhaustion gap is a huge imbalance candle, and it's only a single candle, and it happens between. It's just a one big candle. So this signifies a. Sorry, not this. This signifies a an exhaustion gap. So as you can see, price opened over here upwards at 8:30, and then it dropped back down at 8:45. Really fast, really strong, right? The other candles became weak and weak and weak, and slowly it dropped down. And the reason why we enter off an exhaustion gap is because it gets tapped in. And over here, as you can see, it did get tapped in. So all exhaustion gaps do is signal a reversal in the market. That's pretty much it. It just tells you like, hey, price is slowing down, it's going to start reversing, and that's when you enter off of the gap. If you guys want, it doesn't always work out because fake outs are a thing, but if you guys want to enter with other confluences, go ahead. It works. But anyways, that's pretty much it. And if you guys want to go ahead and join my free webinar, it's a free class. It's literally it's so free that you will like cream your pants. That's how free it is. Okay, you're gonna go to the description, click on the first link that you see. All right, first link. It'll even tell you. Click on the first link, sign up to that webinar thing. It says free webinar. Click it and then sign up using your email and your name. That's all you need to do. You can put a fake name, it doesn't matter. You can put a fake email as long as you have access to it, because we're going to send you a Zoom link to then join a free training class to see how my mentorships go out and play out and whatever you guys can make a decision through there. It's free. You're not losing anything. You're actually going to learn something new, learn more about me, and learn more about how I trade and my lifestyle and all that shit going on. You know what I'm saying? So go ahead and do that, and I'm looking forward to seeing you guys on that class. It's every Saturday, so it happens every single week. And also go ahead and join my new Discord community that I created. It's constantly growing. I'm gonna start implementing new things almost every single week, every single day. And I'm planning to do a lot of giveaways, a lot of prop firm giveaways, and a lot of winnings, and posting all types of strategies, and just having a community together as well. So if you guys would go ahead and join that Discord, that would mean a lot to me, and it would be helpful to you guys and to every other trader that's watching this video. So that's pretty much it for this video, and I'll see you all in the next one. See ya.